Hello everyone. So today I'm going to go over 11 stocks that I believe are good to trade or at least to watch, and they will report their earnings in the next couple of days, and that's why I'm going over these stocks. So let's get started. So the first one is ABM. That's the stock. I like to look at the overall picture when I'm looking at a stock, and you can see that for this stock it's just trending and going up. That's why I wanted to talk about this stock. It went like here, it reached the top, went down, went up, and then down. And I'm looking at the dates, like when the COVID started, that's why it went really down here. But now it's starting to go up, and you can see that here. If you're technical, you can see that it's at the very high that it has ever been at. Um, and you can see that this is called ABM Industries. Its symbol is ABM. It will report its earnings on the 9th of March, 2 days from now. I believe, I don't know what, I'm not actually 100% sure about that, but I think it's gonna report its earnings on this date, or maybe the morning of the 10th of March. But anyway, here is some information about the company, like its float, its average volume, um, and its market cap is 3 billion. So that's a mid-size cap company. Um, we can go to the financials here. Um, you can see that the financials are kind of going up, or they went up until Q3 2020. And these dotted orange lines are the estimate versus the blue lines are the actual. And this is the EBS, earnings per share, for each quarter. You can see annually that it's going up, and on the chart itself as well, it's going up, and it's, as I told you, right now it's at its highest. Um, that's why I wanted to bring that company. And you can look at the debt to asset. You can see it was low here, which is good, and then it kind of raised in there, but then now it's also quite low. The total assets are blue and the total liabilities are the green, and the debt to asset, as long as it's a low number, then that's good. Um, that's about this company. There's analysis based on six analysts. It's a buy. Um, they pay dividends, about 0.19 cents per quarter for each share you have. There are options to trade if you like to trade options. And here's some information about the company. It's in New York. Um, it's Industries Incorporated is a provider of integrated facility solutions. Um, it operates through 5 segments, and these are the 5 segments. And let's go to the next stock, which is CELH. The stock is trading now at $51 or 53, the aftermarket. As I said, I like to look at the overall picture, and this stock is, as you see, is going up. It will report its earnings on March the 11th, like 4 days from now. Not sure what the 11th is actually. That's Thursday, and it's nice that this stock is now at its low here, like relatively. And it's kind of, if you're technical, you can say that this is support too. So I believe that's a good point to buy. It's like buying the stock at a discount, because you can see that it's generally going up, and now the market is anyway going down, so that's why it's probably down here. But I'm pretty sure the market is gonna go up, which is what happens always. It has its ups and downs, but overall the stock market goes up for the decent companies like that. Um, Here's the float. You can see 17 million. Market cap is 3 billion or 3.72. It's decent. And here's the earnings per share. You can see that it's going up. The blue line is the actual, the orange is the estimate. And for last year, the same quarter, it reported a negative cent per share. For this quarter, the estimate says that it's gonna report 3 cents, so that's like 400% increase. That's good. If this happens, it's probably gonna go up. Here's the balance sheet. It was down, went up, and then now it's starting to go down, I guess. Based on 4 analysts, it's buy, and they don't pay dividends. There are options to trade if you would like, and this is in Florida. It's food and beverages, non-alcoholic. This is some information about the company. Is engaged in the development, marketing, and distribution of functional, calorie-burning fitness beverages, and Celsius brand name. So it's like a healthy food company, I guess. That's the company. Next, let's go to the next one, which is on our list, which is CLNE. CLNE, Nasdaq Clean Energy Fuel. As I said, the overall picture is that this company is going up. It started to go down on the 10th of February, which is just like the market, pretty much. So I think it's a good company and a good time to buy now because it's at a discount. You can see that here is like it's about 38%, negative 38% from the top, and I feel like it's gonna recover, so it's gonna go all the way up to here, which is probably gonna be more than a 50% or so. If you buy it here, it's at 11. If it goes to 19, that's almost double. So it's probably like 100% return on investment if that's what ends up happening. And you can see that it's going to report its earnings on the 9th, probably after market hours. And here's the volume. Market cap is 2 billion. And we can see here the EBS. It's actually going down. So if it well, this is 0.00, so I'm not sure if that's, maybe it's not updated. I'm not 100% sure. But if we look at the annual, what's going on annually, you can see that it's kind of going up. So you may want to wait and see what happens for the earnings per share. But I feel like this stock is gonna go up, and it just went down because the whole stock market went down in this period, so it should go up later. Let's look at the balance debt. So the debt to asset went down in 2020, Q2 and Q3, so that's a good sign, and that's probably why it's going up. So I think it might be a good, and this is annually too, the debt is going down pretty much. Might be a good stock to buy now, or maybe wait a little bit later and see what happens with the earnings. But you never know, there might be a surprise with the earnings and they report a really good earnings. Oh, here it says it's the ABS estimate is 0.03 negative. But if it reports a good earnings, then it may go up really quickly, and you may miss on that. But it's up to you, whatever you want to handle that. And based on 4 analysts, it's a buy from Webull here. They don't pay dividends. There are options probably. Yes, if you like options, and this is in California. It's specialized in fossil fuel, I guess. Clean energy. Okay, clean energy is a provider of natural gas as an alternative fuel for vehicle fleets in the United States and Canada. So this is the one, and let's go to the next one, which is DKS. It's Dick's Sporting. Not sure if you know Dick's Sporting or not, but it's a supplier for sports equipment and stuff. Um, it's very known, and you can see that the overall picture is that it's growing. And actually, when the COVID started, it went down like all the other stocks, but it went recovered quickly, and it's now up there. And I'm assuming that's because like people are buy like when the COVID happened, people started to buy equipment. But that's pretty much like what happened to the whole stock market. It went down and then it started going up now, and it kind of recovered. Um, like most of the stocks recovered and went beyond um, what happened before COVID, or where they were before COVID. And the symbol's DKS. It's going to report its earnings on the 9th, which is Tuesday, I believe. It's gonna be at 10 a.m. And here is the earnings per share. Um, the estimate says that it's gonna be more than this quarter of last year, about 2 times. That's a good thing if that's what happens. And here's annually. You can see that here they're estimating it to be very high. That's probably because I think a lot of people bought it like when they stayed home. When COVID started, they started to buy a lot of equipment, fitness equipment and stuff like that. That's why the company it's doing good. And here's the debt to asset. It has been going down. And this is, well, okay. Well, quarterly it's kind of going down, but annually it's okay. It went up. Okay. Here's the analysts based on 26 analysts. It's a buy. Like probably a lot of analysts are watching this stock because it's known popular. And they pay dividends about 31 cents per share per quarter. That's quite good. Options if you like options, and as I said, this is for sporting goods. Channel Sporting Goods Retainer, offering an assortment of sports equipment, apparel, footwear, accessories, and so on. And here's their website too. I actually have bought a treadmill from them recently. And yeah, let's go to the next company, which is on our list, which is the DOCU. That's for signing documents, and you can see the overall picture is that this company has been just going up, and it went up like crazy in 2020. You can see when did COVID start? So COVID started like here, and it went down a little bit. COVID started here, it went down like to 30%, but then it went up and recovered really quickly. And I'm pretty sure that the reason is that DOCU is for signing documents over the internet, so remotely. So like if a company wants you to sign their contract, they can email it to you and you can open it and sign it using DocuSign. And probably the reason is that when COVID started, all the companies started doing business online, and everyone became aware of like utilizing the online services, and that's why they use Docu a lot. Apparently, they started using it a lot, and that's why the stock went really high, like that. And it's probably gonna keep going up because everything now is like online. It's a good business if you're a technology company and doing things online. And I guess it's a good time maybe to buy now because it's at a, like, I would call that a discount. It's like at what, negative 21% discount, and I'm assuming it's gonna go up again because everyone now is using technology and internet. Its price now is at 205. let's look at the financials. So the EBS is just going up. You can see it probably because of COVID, as I said. All the companies now are using their services because everything is remotely now. And here's the estimate. It's estimated to be 22 cents per share. Here's annually. What's going on annually? It's just going up. So it seems like it's a good stock. Here's the balance sheet. Okay, their debt to asset is quite going up. And annually too, it's going up. But the company seems like it's performing good. And this company is on NASDAQ too. It's one of the 100 companies on NASDAQ. So I believe it's a very decent company. And there are options, of course. No dividends. They don't pay dividends. Maybe they'll pay in the future. Who knows? This is it's in California. As I said, the Agreement Cloud software suite for automating the agreement process. So like exactly what I said, it includes DocuSign, e-signature to sign electronically. That's the company. Let's go to the next one, which is EXPI. EXIB World. And it's now trading at $46 per share. The earnings, it's gonna report its earnings on March the 11th. Forgot what date is that. That's Thursday. And you can see the overall picture that the stock is going up. It seems like now might be a good time to buy it because it's at a discount, 44%. So if it recovers and go up, this will be like double your money, 100% profit, because now it's at 45, but its highest was 90. So if it does that, your money will double if you buy from here, if that's what ends up happening. And here's the financials. You can see the earnings per estimate. It's just going up. That's on the quarterly, and the estimate is 7 cents per share. And here's the information annually. And this is a balance sheet here. This is quarterly, what's happening. This is annually, it's going down annually. That's a good thing. Let's look at the analysis based on 3 analysis. It's a buy. And no dividends. There are options. Here's some information about the company. It's in the United States. Real estate services. It owns and operates a cloud-based real estate brokerage and a technology platform. Enables business to operate remotely. It's probably a good thing when a company has like an online thing, because everything is now, like when COVID started, everyone started to realize how important it is to rely on the online services and have that. Here's the company's website too. Just a quick look. And the listing date started in 2011. You can see overall it's going up. It's a good thing. And let's go to the next stock, which is FNV. So that's a monthly chart, and overall it's going up. It just started going down in August, or I would say August 2020. Started going down, opposite to the other market, like to the other stocks. So I don't know. So the earnings, it's going to report its earnings on the 10th. The stock price now is at 109. The earnings per share, you can see, are going up. and the estimate is higher than this same quarter last year. This is annually. Its earnings per share is going up, and the debt is going down. So I'm surprised that it's going down like that. It's trending down, but maybe it's gonna trend up again. I don't know. I'm surprised that it's going down like that. There's probably news or something that affects um, the operation of this company. Maybe like its field is not recovering well now. We'll see. But based on 8 analysts, it's a hold. So it doesn't seem like a very good company to invest in actually now. It pays dividends though, 26 cents per share per quarter. It's quite good. Insiders activity. There's nothing here. You can trade options. Here's the company. It's in Ontario, Canada. It's in mineral resources or metal and mining. So it's in the metal and mining industry, and maybe the metal and mining industry is going down now. Corporation is a global focused royalty and stream company. The company owns a portfolio of royalty, stream, and working interests, covering properties at various stages from production to early exploration. Companies engaged and working interests in mining and energy sectors. That's what they do. Let's go to the next stock. Maybe this one is not the best. WBM. The next one. Wheaton Precious. Okay, it's in the metal and mining too, and that's why it's going down. So it's something about the industry itself that is taking the stocks down like that. Apparently, I'm not sure what's going on with the industry, but there's something about the industry itself. Apparently. But overall, you can see the whole picture that this company is going up. And if you're technical, you can kind of say that. Well, actually, I don't know. If this is a support, then I believe it broke the support and it went down, so it's gonna go down even more. Maybe I'm not very sure. But here's the earnings per share, earnings per share, quarterly, and here's annually. It's kind of flat till 2019. For 2020, it might be like really high. Here's the balance sheet. Debt is going down. Here's the analysis based on 17 analysis. It's a buy. They're expecting it to go up, and they pay dividends, 12 cents per share. And it's in Canada, so maybe it's about Canada as well. And here's information about the company. And you can let's go to the next company. It's CASY. So the overall picture is that this company is going up. It was listed in 1983, and from 1983 it has just been going up, as you see. This is a monthly chart. The day chart, it's a little bit down from the highest, about 3.5%. Here's the financials. The earnings per share have been going up, but it's estimated that it's gonna go down in Q3, like for this upcoming one, but it's still gonna be actually above what happened in the same quarter of last year. Here's annually what's going on. It's just going up. Balance sheet, debt is going down. Good sign. And earnings it's going to report earnings on the 8th of March. That's tomorrow, Monday. at 8:30. Here's the analysis based on certain analysis. It's a buy, and they pay dividends. It's 34 cents per share. Here's insiders activity. Seems like this guy sold, just kept selling in January. So I don't know, maybe he was expecting. I'm not sure. Here are options. You can trade options, and here's some information about the company. It's in the United States. Its sector is food and retail and distribution. Here's some information about the company. It operates convenience stores in 16 states in the Midwest and South. So if you guys are in the Midwest or South, maybe you're familiar with that. Let's go to the next company, which is SFIX. Stitch Fix. You can see the overall picture that this company is going up. It just started to go down on January, or pretty much like starting from February 2021. That's not too long, so I believe that it should recover. Trying to see how much. Okay, so it's now it's like 30% down, and it's going to report the earnings on the 8th, and the ABS estimate is negative 9 cents. Here are the financials quarterly, and here's what's going on annually. It actually has been going down, even though the price is going up, but it's what's happening. Here's a balance sheet. It's going up also, the debt, so maybe it's not the best company. Yeah, and the analysts, based on 17 analysts, it's a hold, not a buy. So they don't pay dividends. There are options to trade if you like. It's in California. Here's their website. Here's some information about the company. It's an online personalized styling service company. The company offers apparel, shoes, accessories. So it's an online retail, like they sell clothes and stuff like that. Here's their website. Just a quick peek. Let's go to the next company, which is, and that's actually the last one on the list. It's quite a good. Before I start analyzing it, if you guys see value in the channel, it would be great if you subscribe and click on the notification bell so that you get notified of the videos as soon as I upload them. You can also get free stocks if you sign up to Webull, and there is a link in the description below. And here's this last company. Overall, it has been going up. You can see. Just started going down on February, like 15 or 16. That's when the whole market started going down. So it's a good, like, it's not a bad thing. It's a good thing if the company just goes down, just like all the other stocks, because that means that when all the other stocks go up, it's gonna go up as well. It seems like it's at a discount now, 23%. It's might be a good deal. Here are the financials, earnings per estimate. They're expecting it to be 45 cents versus last quarter. At the same time it was 13 cents. I'm not sure if you can see it or not, but it was actually a negative 0.01. So that was negative 1 cent. Actually, the blue line and the blue text is the actual. So what happened in this quarter, same quarter last year, the earnings was negative cent, and for this quarter, it's estimated to be 45 cents. per share, so that's good. It's probably gonna be here or here. It's not bad. It's good. And annually, you can see that earnings per share is going up. And here's a balance sheet. It's kind of, I don't know. It's pretty good. 10% or 11% debt to asset. That's quite good. And here's the analysis. Based on 6 analysts, it's a buy. Insider's activity. The director, not sure. Not sure if that's super accurate or not, because it seems like he bought and sold right away in the same day. Or maybe that was when it was reported. I'm not sure what's going on, or there was a mistake or something. This company's in California. It was listed on in 2007. And here's some information about the company. Designs, develops products, supports and operates a portfolio of products and services for the government, industry or agencies, business and consumers. It's in the aerospace and defense industry, by the way. And that's a good industry, I guess. And that's the company. That's the last one on my list. I hope you guys enjoyed the video and wish you the best of the luck.